Hello there. Welcome to Accounting Space. In this video, we want to look at Zimsec Business Studies A level. We are going to look at an aspect of incorporation. So we are going to start by explaining what is incorporation within the context of the Business Studies A level syllabus. So incorporation basically is a broad term to describe a business registered with the state to become a separate legal entity. So very important to note that an incorporation is a separate legal entity, and it is obviously owned by shareholders. So this is what we have in terms of an incorporation. So further explanations that we can give in terms of incorporation is that it is the term used to describe the formation and registration of a limited company. So at the end of the day, we would see that it is a legal process of turning a business into a company. It is the resulting legal entity that separates the form of the firm's assets and income from its owners and investors. So basically, that's the scenario that we have. So the assets and cash flows of the business entity are kept separate from those of the owners and investors, which is called limited liability. So we have limited liability being the main characteristic that we have of incorporation. Remember, we are saying there is an issue of shares that takes place that takes place in the corporation, as we are saying. It is a legal process of turning a business into a company. So as it is turned into a company, obviously there is an issue of shares that are going to change hands. So in that case, obviously there is also the basic element that we have of limited liability as one of the main characteristics of our incorporation. So in this video, we want to go through an evaluation process or a discussion in terms of incorporation, whereby we are going to look at the benefits of incorporation, and also we are going to look at limitations or be it disadvantages of incorporation. So obviously we are going to start with the benefits of incorporation. So we can just say benefits. So the first benefit that we have is limited liability. We have explained about limited liability, first benefit. And remember, these benefits are also advantages. Limited liability, we said it explains that assets and cash flows of the business entity are kept separate from those of the owners and investors, which is called the limited liability that we are talking about. So if you try to define it from another point of view, we are saying we are talking about limited liability. It is a legal protection whereby owners and shareholders have no personal responsibility to their company's debts or financial loss. So basically, we are saying, for example, giving a typical example, when the company is closing, is liquidating, obviously there are debts which needs to be paid, but the company cannot go to take the personal assets of the owners, be it the shareholders, their personal assets, so that they can settle the debts of the company. They cannot do that. There is no legal basis on doing that. So the personal assets of the owners are protected. So that's why we are saying it's a legal protection whereby owners and shareholders have no personal responsibility to their company's debts or be it a financial loss. So basically, that's the benefits, the first benefit that we have in terms of incorporation. So on the second benefit that we can try to raise is that there is greater potential to raise capital, as we know that there is an issue of selling of shares. So we can say there's an issue of issuing of shares. So we are saying greater potential to raise capital. Or greater potential to raise capital becomes the second benefit. So we're saying the potential is coming from the point of view that we have got the issue of issuing of shares that will be taking place. So from that process of issuing of shares, that's where we have the potential to raise more capital. So basically, that's what we have in the second benefit. So we try to look for the third one. That we can also include as a benefit of incorporation. So there is continuity of existence. There is continuity of existence is also a benefit or advantage. Continuity. There is a continuity. We are saying there is continuity. Continuity of existence. So a continuity of existence is coming in as for example, in the event that the owner dies, the owners of that company dies, the corporation will continue to exist. It's different from a sole trader, whereby we are saying if the owner dies, the obviously the continuity is going to be compromised. So it's different from in corporation. There is continuity. So this is what we have. Then we'll try to look at the fourth one that we can include. There is also better management due to divorce of ownership and control. So remember, ownership and control, they are separate, as we are saying, they are separate legal entities. So the owners and the company are separate legal entities. So in that case, we say better management is a result of that. So we are saying better management is there as the fourth benefit. Better management, as we are saying, due to divorce of ownership and from control. Due to divorce of ownership. So this is what we have on the fourth one. And also the issue of tax, the tax system is lenient on corporations. So we are saying they are lenient on incorporations. So basically we are saying it becomes an advantage or benefit. So we are saying they achieve a lower tax rate. They achieve a lower tax rate as the fifth benefit. So obviously we said in this video, we are going to go through an evaluation, or we can rather call it a discussion, whereby we are going to look at both sides of incorporation. We've looked at benefits, and also we're going to look at the other sides, which are the cost of incorporation. So on this one, we can also try to see. So on the first one, we can going to see that the registration process is very costly, and in corporation, that can be also a cost. So we are saying on the first one, we're going to say higher cost of registration fees, higher cost of registration fees, and also obviously the cost is also, which means there's a higher cost of corporate tax. So this is what we have on the first cost that we can include. Then we can try to see any other costs that we can also include there. So there is issue of legal formalities also. More legal formalities they are involved, which is a cost. So in the issue of our legal formalities, we are talking about the documentation that is involved. We have got too much documentation involved, which is also going to cascade to increasing the legal cost. So we are saying the documentation that are included. We have got the issue of articles of association is one of the documents that is involved. We also have got the memorandum of association also being involved. So those are some of the documentation that we are talking about that are going to put pressure on the legal costs. So that's what we have on that one. The last one that we want to look at is on the restriction in share capital transfers. Restrictions on share capital transfers. Restrictions on capital transfers. So obviously, this is going to be our third cost that we have. So you see that we have got lesser cost than benefits. So through our evaluation process, we've seen that we have got more benefits than cost according to our evaluation of this video. So thank you for listening. And please, let's not forget to subscribe and share to our channel. Let's not forget to share the link to our colleagues who are doing Zimsec Business Studies A-Level. And let's take note more typical examination questions will be uploaded on this channel. So let's stay tuned. Let's get notified by subscribing and turning on the notification button so that you become aware of our new uploads. As for this video, I'm signing out. Let's meet again in the next video.